Is the stock market going to crash? Who will win? One deadly virus boy or one money printing man? What is happening, investors? It is your boy Jack, and today we're going to be speaking about will the stock market crash, and today there's going to be a bit of an emphasis on the Fed and what they are doing right now and how it's going to affect all of us investors going forwards. At this stage, everybody knows one massive reason the market has continued to rally upwards is because of the Fed. Take a look at how much their balance sheet has gone up over the last few months. I mean, since March, they've pumped about $3 trillion into assets. And only a couple of weeks after the Fed started pumping money into the markets, the S&P 500 started to move back towards the upside. Right now, legendary investors are on the sidelines. The biggest hedge funds in the world are on the sidelines. A couple of days ago I made a video about the fact that Warren Buffett is completely and utterly on the sidelines. I mean, he's more than on the sidelines. He is selling. Ray Dalio, the owner of the world's largest hedge fund, said that we could be looking at a lost decade in the stock market. I mean, these are scary things. So today, there are 5 things I really want to speak about. Number 1, we could see a $10 trillion balance sheet from the Fed by the end of the year. 2, what actually are the implications of the Fed purchasing all of these assets? 3, are we heading into an asset bubble similarly to the dot-com bubble? 4, will a second lockdown happen and how would that affect everything? And 5, can the world return to normal without a vaccine or without a cure? So that is what you can expect from today's video. And right before we get into the first point of the day, can I ask you to please smash a like button? If we break over 400 likes, then your position in Delta Airlines, NAT, or Carnival Cruise Line will go up tomorrow. It's a guarantee. Of course, please subscribe if you're new around here. We're on the final stretch to 10,000 subs. It really would mean an awful lot to me. And drop me a comment down below. I want to know what you're doing at the moment. Whether you're sitting on the sidelines or you're still buying stocks. I actually put a poll up about this on my community page yesterday. So I want to hear from you guys what you're doing right now. So with that being said, let's get into the first point of today, and we're going to be speaking about the Fed's balance sheet. The first thing we have to speak about today is this headline right here. A $10 trillion Fed balance sheet is coming. Now, a lot of you might not even know what a Fed balance sheet normally looks like, so that's what we'll have a look at first. We go back to 2008, and early 2008, the Fed didn't even have $1 trillion on the balance sheet. So this is obviously coming out of the Great Recession, okay? And then they pumped money in there. I mean, look, they went up in the span of a couple of months to well over $2 trillion. And then you can see they kind of hovered about there. It slowly but surely went up in general. There's been some nice upwards, a lot of sideways. Now, right before, what happened? We were down at about 3.7 trillion. This is back in 2019, okay? And then coming into 2020, it was up. It was around 4 trillion. Now, this is where things get really, really interesting, okay? March 11th, we're at 4.3 trillion. Okay, literally 1 week later, 4.6 trillion. Another week, 5.2 trillion. And it goes up and up, people, all the way to peaks of $7.1 trillion. So this is not a normal balance sheet for the Fed by any means whatsoever. They are pumping money into the economy. So right here, March 11th is when they started pumping money in. Here's March 11th on the S&P 500. So once they started putting money in, the market went down, another 18 or so percent. It literally only took the Fed 2 weeks of pumping money into the market to get it to move back up, and to get it to move back up very quickly. And we just saw a few red days as of late. What has the Fed been doing? If we go back to June 2nd, okay, they didn't really do anything between June 2nd and June 9th. Not a lot happened at all. Okay, and not a lot happened in the market either. 4% up. Then from June 9th to June 16th, they actually had less assets on their balance sheet. And the market didn't like this. It went down, and it still is down. So the Fed is extremely powerful when it comes to moving the market. The Fed can get the market to do what it wants. And that's why this here is so interesting and has to be taken very seriously, because if we're to see a $10 trillion Fed balance sheet by the end of this year, there is no way the market can't make considerable new highs. And so I've seen a few people speaking about the fact here that they didn't buy anything for a couple of weeks, and it made people very, very worried. They thought, is this the end? Is this stock market crash 2.0 the second stock market crash we've all been waiting for? And then you see a headline like this and you have to think, no. And this isn't some clickbait article made up by some news site just so that they can get a load of clicks and sell a load of ads, but it was William Dudley, a former New York Federal Reserve Bank president, who speaks about this happening. So it's a credible source. Now, the second point of today's video, what are the implications of this? What actually happens to us when the Fed starts to purchase assets? The first thing is that the amount of reserves and bank deposits will have increasingly sharpened, which is what's happened during the past few months, with a doubling in the amount of bank reserves. These reserves will keep growing as the Fed expands its balance sheet. Bank balance sheets, all else equal, will be considerably larger. If any particular bank tries to shrink its balance sheet by turning away a household or business deposit, those funds will simply flow somewhere else within the banking system. So banks have more reserves. The second implication is that the private sector will now hold more cash and deposits than before. The There is nothing the private sector can do about this collectively. If I, for example, try to exchange my cash for other financial assets, the seller now has the cash. It doesn't just disappear, it just gets reallocated. So that cash is here to stay no matter what no matter what the banks, no matter what business does with it. That cash is now real and it will just go from hand to hand. The third implication is that the private sector may react to the increase in cash and deposit holdings forced on it by the Fed by seeking other, riskier, higher yielding assets. In fact, this is a major motivation of quantitative easing. By reducing the supply of safe assets and increasing the amount of deposits that the private sector must hold, the Fed generates a demand by the private sector for more risky assets. The result is a rise in financial asset valuations and an easing of financial conditions. The Fed's asset purchases change the mix of assets available to be held by private investors, and this influences asset valuations. And this is what we're seeing right now, asset prices going up because there is more money put into the markets by the Fed. And now what's potentially the most important and most interesting of all points, and is speaking about inflation, because this is something that a lot of people are very worried about. This concern is misplaced. The Fed can adjust the interest rate it pays on bank reserves, controlling the cost of credit and influencing whether the reserves are lent out. If there were ever a surge in bank loan demand, the Fed could restrain it by raising the interest rate it paid on banks' excess reserves. This would give banks an incentive to keep the reserves on deposit with the Fed. And this is where things get really interesting, okay? The ability to pay interest on reserves allows the Fed to have a balance sheet as large as it desires. And if you know what the Federal Reserve's job actually is, this makes a lot of sense. And look, there is our boy Jerome H. Powell, the big money shooter. They conduct the nation's monetary policy to promote maximum employment, stable prices, and moderate long-term interest rates in the US economy. They promote the stability of financial systems and seek to minimize and contain systemic risks through active monitoring and engagement in the US and abroad. They promote the safety and soundness of individual financial institutions and monitors their impact on financial systems as a whole, and you get the picture. That's what they do. That's what they are in charge of. That's why this makes a lot of sense. Now, the inflation thing, the thing is interest rates are pretty much at zero. So what is that going to mean? The truth is, we don't really know yet. We don't know how long this is going to go on. We can expect it to be a year or two, and there could be some sort of inflation. But there is some sort of inflation every single year, and the Fed are big enough and smart enough to not let inflation get out of hand. What I will say is I don't think we're going to be the next Zimbabwe, okay? And Zimbabwe has a $100 trillion note, which is worth just 40 US cents. That's not going to happen. Okay, the third thing I want to speak about today is, are we heading into an asset bubble? Something like the dot-com bubble. Fed's buller doesn't see signs of a damaging asset bubble forming. Bubbles are always an issue, and I do keep my eye on it, but I am just not seeing things that are on the same magnitude as what happened in the late 1990s, the so-called dot-com bubble that blew up on us, and then the much more serious housing bubble in the mid-2000s. So simply put, he doesn't see this being in any way comparable to those two particular bubbles. And here's the thing, okay? He said that firms were taking on debt to make sure they can survive and thrive in a time of low revenue, and that is exactly what's happening. Now, of course, there is always two sides to any given argument, and there are people who believe that the Fed's relief measures could form the greatest financial bubble in history. Again, the truth is that nobody knows if there will be a bubble or not. What can be said is the Fed is doing their job. They're doing what they have to do. It is their job to keep the markets alive and the economies alive. Only time will tell what actually is going to happen. And I don't expect anybody, myself included, to completely agree with what the Fed is doing. But at the end of the day, it is not our choice to be made. And this is one thing in particular I'd like to bring up that I don't agree with being done. The Fed says it is going to start buying individual corporate bonds, and this just seems like the absolute ultimate market manipulation in my eyes. Previously, they had been buying only ETFs. Stocks added another leg higher on the news. Of course, when you hear something like this, you're going to want to buy stocks, as did ETFs that track both investment grade and junk indexes. They really want people to buy stocks, and they're going to do anything they can to encourage people to do so. Personally, I don't think we're heading into an asset bubble. If I did, I wouldn't be buying anything whatsoever. I'd probably sell absolutely everything. That would be the logical decision. But I'm not the Fed. I'm not one of the best investors in the world. I'm no genius, and I'm no time traveler. We'll have to wait and see what happens. Now, in regards to the stock market crashing, okay, what I want to speak about next, we're moving away from the Fed, and we're going to speak about, will a second lockdown happen? Pretty much worldwide, but specifically in the US. A nice little article here. Here's why stock market distress over spiking Roni cases is intensifying. We are in deep trouble, says Dr. Joseph Gerald, a University of Arizona public health policy professor. So here is the virus cases by day in the US, and we can see that obviously it had a massive little spike at the start. Then it kind of started to come down slowly but surely, you know, as places locked down, as people became smarter and more informed, it was going down for a considerable period of time, okay? but now we can start to see an uptrend happening, and they're having some of the highest days that literally they've ever had. Now, Trump has already come out and said that he won't close the country if a second wave of the Roni hits. That in itself is terrifying. In the US, there's been 121,117 confirmed deaths off of this virus already, and he's saying that he won't shut it down. This to me is honestly scarier than what the Fed is doing. In the short term it might be good, you know, businesses might flourish for an extra month or so, but what happens when this just gets completely and utterly out of control? What's Trump going to do then? When all of the airlines have to stop going again? When all of the hotels and restaurants and casinos and everything that brings all of the tourism money into his country, what happens when all of them have to close down again because he's let the country get completely and utterly out of control? And I've heard the argument now that a lot of people who will, you know, become deceased from getting the virus would have already gone, and that to me is just, it's a very ignorant statement. It's kind of like saying, oh, it was really bad, you know, it was horrible and stuff, but look, if it happens again and I'm okay, who really cares? On the other hand, we can have a look at China, okay? And not too long ago they were saying we're back to where we were, okay? Beijing fears the second wave of Roni, but they have also come out and said that it's all under control and it's nowhere near as bad as the first time. So if that's true, and we can now have these things under control a whole lot quicker than we did last time, you know, a second wave isn't as scary even if it is to come. But that's only true if the restrictions are put in place, which Trump doesn't seem to have any interest in doing so. Now as well, nobody really knows what to believe that comes out of China. We've seen a lot of what is deemed to be untrue information come out of the country, but if the things like this are true, the active cases in China are very, very low. Now they have started to go back up, you know, we've seen some 200, 300, 350 plus days, and they are on an uptrend. But this is China, a massive place compared to where they were at 58,000 plus people infected. It's obviously a great place, and I don't think the term second wave is justified just yet if they can keep it under control, as they've said they are doing. So obviously the thoughts of a second wave is scary, but I think that the world as a whole will be much better equipped to deal with it this time around. We know what it's like, we know what has to be done, it can be done a lot quicker. I personally am not too afraid of a second wave. It might just mean we have to have another month or so of lockdown, maybe 2 months of lockdown. In return for the rest of my life being able to live a healthy, good life, I'm happy to do that. And the final thing I want to speak about today is, can we return to normal life without a vaccine? So I mean, every single day you're met with an article about a new vaccine. One that's going on in Europe, one that's going on in America, one that's going on in China, in Ireland where I'm from, in the UK, absolutely everywhere. The thing is, guys, let's be realistic about it. Vaccines in general take years, literally 1, 2, 3 years to be made, to be trialed, and to be available to the public. The truth is, if we're waiting for a vaccine to come, a scientifically approved and tested vaccine to come through for life to go back to normal, we're going to be waiting a while. Now, can life go back to normal without a vaccine? Speaking about Ireland specifically, okay, there's a lot more things I can do right now than I could do 2 months ago. From next week, I can go to the pub, you know, I can meet a few friends, I can have a few drinks, we can have a laugh, we can watch the telly. I'm now allowed travel to my friend's house if social distancing is enforced. I can now get on a plane and go on holiday to a different country. I can go to a restaurant with my girlfriend to get a meal. Now, things aren't normal, you know, there's going to be big glass sheets everywhere, there's going to be people in masks, there's going to be gloves everywhere, you're going to have to book in if you want to go to the pub. Things aren't going to be normal, but there will be hints of normality coming back to life very soon. Now, I'm aware the situation's very different in a massive place like America. Compared to where we were in this country in particular, we are so much better than we were 2 months ago. You know, people are going back to work. Life is returning to normality, and we don't have a vaccine. In the small county where I live, there hasn't been a new case in our hospital in over 4 weeks. If the world could do this on a larger scale, we would be laughing right now. So honestly, I do think that the world will at least give us hints of normality before we see a virus. People aren't going to sit in their house scared of their lives for the next 2 to 2.5 years. It just isn't realistic. So guys, that is it for today's video. If you did watch until the end, please do drop me a comment down below. Let me know your thoughts, and let me know what you think about what we've spoken about in today's video. Of course, please do also drop a like, genuinely helps me out absolutely massively, way more than you know. And if you're one of the ones who watched till the end, I have some very, very exciting news coming up when we hit 10,000 subscribers. Like, literally life-changing news. So stay tuned for that. I will see you all for tomorrow's video. I hope you have an absolutely fantastic day. Go enjoy that sun. Hopefully it's sunny where you are. Peace.